back. You're watching Indian Open right here on BloombergQuint Live. Asian markets this morning are faring okay for themselves. Remember, taking on the back of what the US markets did post the Fed rate cut. So you've got Nikkei 225, which is up about 0.25% higher for Hong Kong. Shanghai is trading marginally under by 0.25%. For the SGX Nifty, we're up 1/3% this morning, so not bad going at all. Taking cues from there, hope to see our markets open in the green. This would probably, if it does and it stays there, could be the 5th straight day of gains for the index.
Yeah, at some point of time, people will take heed of the near term as well. Maybe it's there for an expiry and there could be some profit booking too. And banks have stopped participating. If TCS, which has had a mammoth run over Infosys in the last 7 or 8 trading sessions, also decides to pull back, difficult to see how many heavyweights will come in.
So banks have not been the lead cause for the index to come, but they definitely have participated. And now looking at the renewed interest in SBI, I mean that's
the commentary was pretty solid.
Yeah, and not just the analyst commentary, but just when you saw Rajneesh Kumar talking
after the
results, he was so confident about the asset quality improving and the resolution happening for those 3 key accounts. All of that really probably builds the confidence as well.
Yeah, cross fingers. I mean, the bulls would be hoping that it percolates to the other corporate-facing banks as well.
Yep.
Let's wait and watch if that does. For now, though, quick mention of the derivative space. It's the FNO expiry, the monthly expiry as well. Navneet Saluja is standing by with the FNO setup. Morning, Navneet. How's it looking?
Good morning to both of you. While the bulls continue to dominate our markets, we've seen strong gains in the last 4 trading sessions. Yesterday, across the board, if you looked at the Nifty futures, there was some bit of unwinding, though, coming about. Remember, for the series, Nifty is up about 2.5%, but Bank Nifty is the one which is underperforming. So for the series, till now, at least till yesterday's closing, Bank Nifty is just about flattish. Nifty Bank rollover stood at about 45%, but India Volatility Index continues to surge higher. In fact, in the last 3 sessions itself, India VIX has risen about closer to 9%, and yesterday, India VIX was up about 1.5%. Importantly then, what levels you should watch out for today's monthly expiry. Maximum open interest on the call side, it is at the 11,800 strike, whereas on the put side, it is at the 12,000 on the call side and 11,800 on the put side. So probably that's the range you can watch out. But what happened yesterday, right from the word go, there was put writing seen at 11,800 during the session. It moved to 11,850. And if you go by the premium around the 11,800 put, which is still somewhere about 27 to 28, that's giving you a support of about 11,770 at least for the day. And on the higher side, traders will be watching out for the 11,900 mark as we march towards the 12,000 mark as well. In terms of stock futures, a lot of stocks were in focus, and the PSU banking space especially was up and about. So you had long positions coming in for Bank of India. These are across the series positions. You also saw United Breweries, which was down for the 4th straight session. For short positions continue to build up, and short covering seen for stocks like Indigo as well as Ramco Cement, which surged after a strong set of numbers. What did the FIs do? Well, ahead of the expiry, there were some short positions seen on the index futures side. They built up nearly 9,600 contracts, and the positions were spread across on the index options side. There was a lot of build-up which came a day before the expiry. Put short 42,000 contracts added, and similarly, even on the put long side, they added about 44,000 contracts. With that, it's back to you guys.
Thanks a lot for that, Navneet. So that's what you need to watch out for as we step into the monthly expiry today. Parthiv Shah, Director at TRACOM Stockbrokers, is joining us right now on the show. Parthiv, a very good morning to you. Let me begin with SBI now. This was somewhere lost in the background when the larger private banks like HDFC took center stage. But Q2 is somewhat changed perspective for the bank, you think?
Good morning, Devina. Devina, what I'm pleasantly surprised with is, instead of talking about a very tepid FY20, which the management did acknowledge in the analyst meet, that FY20, there could be some shocks, and now new shocks are being talked about coming or emerging from the telecom sector. But I think the guidance given for FY21 and 2022. So, I mean, in terms of all parameters, I mean, if a huge bank, behemoth like SBI, talks about returning back to ROA of above 1% and credit costs going almost lower than 1%. I think these would be amazing numbers if they were to achieve. So I think we have seen a trend of many companies now talking about a lot about in future vis-a-vis what is the current state of affairs, which tends to build some sort of excitement. And I think it's a very steep target that they've kept for FY21 and 22. But if at all they were to achieve anything close to it, then I think SBI could be a lot higher. So I think from current standpoint, my sense is that SBI could rally by say 5 to 10% over the course of time. But I think these are the type of markets which are not going to trust such futuristic commentary. They're going to wait and watch for the upcoming quarters. And if at all there are going to be any further shocks in FY20 itself. Also, I think the bank might need to raise a lot of capital, including likes of SBI. So how much of equity dilution takes place, which impacts the ROEs going ahead, which no doubt they have discussed in the analyst meet. But to be very honest, not getting very much carried away with the analyst commentary post the analyst meet. I think one will have to wait and watch. But still, I stick my neck out and believe that private sector banks till FY22 over the next 2 to 3 years will outperform likes of SBI.
But you still got decent enough target prices put out by UBS and HSBC, somewhere closer to about 400 odd from HSBC as well. So there is some upside there. The stock has been an underperformer. It's been a laggard of sorts, and whether or not there is a catch-up done, we'll have to wait and watch. So far, the interest is building gradually.
Yeah, it is. But, you know, it's also percolating into other PSU banks, right? Maybe yesterday all the PSUs went up, but with it, some of the PSU banking names, United Bank of India, Central Bank, Syndicate Bank, all of which went up in the session yesterday. Parthiv, while SBI has done what it has done, and I take on board your point that let's not get too excited, is there merit in re-looking at some of the small PSU banking counters, or would you just leave them alone?
See, yesterday there was some definitely sort of an excitement, but say talking about a bank like Canara Bank, where the government is now talking to pump in money at 234 rupees a share, which is certainly at a premium. That in a normal scenario should, I think, help. But we know that a lot of this capital is probably not going to go for the growth of the bank. It's going to go for the current cushioning or dire straight in terms of need of the capital for the bank. So I think very frankly speaking, what's going to happen in these PSU names is they're almost at all levels at the best, I think, positional trading bets. Neeraj, my problem is that they're never like investment bets. And I think you see the wealth destruction that they've done over the past 5 years. And now I think I really don't want to get excited because in the last 5 years, there's been wealth destruction. There's been humongous dilution in the equity. There are no chances of these banks returning to kind of credit costs, which are anywhere close to the private sector peers. They won't come back to double-digit ROEs very soon. And still, I think they will have to focus on priority sector lending, which is where the government tends to focus on for many of these PSU banks. So I think very frankly speaking, not getting really carried away, they might be 10 to 15% positional trades from here. Definitely things might look better in FY21. So they might give that bump up. But very frankly speaking, I think we have always seen time and again, these banks tend to give some sort of accidents in terms of the asset quality. So I think I would still avoid these PSU banks.
Okay. Got that, Parthiv. Lots more to talk to you about. And since we're on the topic of SBI, we'll get in Shefali to talk a little bit more about the key takeaways from that analyst conference call. But we've also got IOC to watch out for. That's the only Nifty 50 company that reports its numbers today. And a few other stocks that are there in the news. Nikki joins in for that. In fact, Nikki, let me start off with you.
A couple of results first. Container Corp, where the results were below estimate, at least on the operational front. Top line, the company reported a 5% downtick there year-on-year basis, and the net loss, the company reported a net loss of around 322 crore versus a profit figure of nearly 336 crore. Now, this loss was mainly in the current quarter due to ineligibility of the benefits under export scheme. Also, there was a deferred tax reversal to an extent of 248 crore in the current quarter. Having said that, the operational performance still was below estimates. The number that we were working with was around 458 crore, and the company has reported a downtick of 16% there. Tata Global Beverages, where it's a mixed set of numbers. If you look at the top line performance, the revenue is down by 4.5%, but then the company has reported a net profitability downtick there, 19% downtick there. Other income essentially has come down by 64% year-on-year basis. However, we have seen some amount of impact coming in also in AS. In terms of operational performance, well, decent set of number there, 41% uptick at a number of 234 crore. However, the company has reported that overall H1 was reported was impacted by lower realization and commodity price deflation. JK Tyre, where the top line is down by 13%, but then the profitability shot up by more than 3 times, mainly on account of the deferred tax reversal to an extent of more than 150 crore. Other expenses too have come down, and operational performance too has been healthy. 13% growth there on account of the lower cost that we've seen on raw materials. A couple of things on AGR, the after effects. Bharti Airtel, where Fitch rating has gone ahead and placed a BBB rating, long-term foreign currency issuer default rating on rating watch negative. This comes after the Supreme Court ruling on October 24th. You also have Reliance Industries, where Reliance Jio has essentially objected to telecos seeking relief from DOT, and a Vodafone Idea, where there is a rating cut again, this time coming in from CARE Ratings for bank facilities, and this is also on account of Supreme Court ruling. In terms of bulk deals, just one counter there, HDFC Life Insurance, which we saw yesterday, the shares going up as much as 5.5%. Promoter was on the selling side, offloading almost 4.5% stake. On the buying side, you had Capital Group, which essentially acquired in 2.52% of equity.
Okay, Nikki, thanks very much for that. Quite a long list of stocks to keep an eye on. SBI too, we've been talking about it since morning, but what were the key highlights from that analyst call?
The main highlight was that they plan to achieve their return on assets of 1% by FY21. So that's the key takeaway. And how they plan to achieve it, couple of things that they guided, that the second half of this year is going to be a much stronger one in terms of asset quality, especially in it. And SBI is pinning down their hopes on better recoveries going forward in the second half of the year and in FY21 as well. They're confident of sustained improvement in core operating performance, and other than that, asset quality is also likely to be better, which is going to result in lower credit costs as well. Prioritization and focus on credit quality has impacted their growth rates. That's what SBI told the analyst in the analyst meet yesterday. And one of the IPOs that they do plan to bring about in next few months is that of SBI Cards. So that is something that we can watch out for. And in the worst case scenario, even if there is stress on the asset quality, the ROA can slip to about 75 to 80 basis points. But they would aim to achieve that ROA of 1% by FY21 end.
All right, SBI, that's going to be in focus. And also IOC reports numbers today.
Well, a strong quarter, sequentially strong quarter is expected. If you see the headline numbers, the revenues are expected to be down by nearly 8%. EBITDA is expected to be marginally down by 1% to close to 8,300 crore rupees. The margins are expected to expand to 6.8%, while the net profit is expected to be 3% higher to close to 3,700 crore rupees. The gross refining margin, that is the key number, is expected to come in at $5.1 per barrel. Now, a stronger refining and marketing environment will be the positives in this quarter, but however, some of these positives will be offset by an inventory loss and tepid consumption growth. Now, the Singapore gross refining margin that averaged higher at $6.5 per barrel, which will aid the refining segment of the company. On the marketing segment, the gross marketing margin earned by Indian Oil Corporation on sale of every litre of petrol and diesel that averaged higher at 3.4 rupees and 3.7 rupees per litre, which will aid the marketing segment. Now, if you see Brent crude, that averaged lower at around $62 per barrel. Now, though Brent crude jumped the most in the second quarter, the gains were short-lived, and the average crude prices were lower compared to last quarter, because of which the oil marketing company could report an inventory loss in this quarter. Now, EBITDA is expected to decline compared to last quarter, while the net profit growth is expected to be lower because of some one-off adjustments in the first quarter of financial year 2020. Now, if you see in the first quarter, the company had written back an earlier made provisions worth nearly 627 crore rupees related to dispute of sales tax and value-added tax, because of which the EBITDA and net profit was high in the last quarter, and that's the reason you're seeing some downtick in the EBITDA numbers. On the petrochemical business, if you see, there's expected to be lower because of lower product spreads, while the company is also expected to report a foreign exchange loss in this quarter. On the operation side, the crude throughput is expected to be higher by 5%, while the sales are expected to be down by nearly 6% to close to 20.4 million metric tons. And the key things to watch out for from Indian Oil earnings would be GRM and marketing margin outlook, inventory and foreign exchange gains, petrochemical performance, gross debt, and pending subsidy reimbursements from the government would be important to watch out for from Indian Oil Corporation earnings today.
All right, Samad, thanks very much for that. So watch out for all of those names in trade this morning. I want to come to you on telecom, Parthiv, and what's the road like ahead for the likes of a Bharti and a Vodafone now?
Unfortunately, it's a terrible mess, and this is an industry which is having a total debt of 4 lakh crores. And now this particular implication from the Supreme Court ruling makes the incumbents Vodafone Idea and Bharti almost pay up around 1.3 lakh crores. And at a point in time where we know that they are terribly struggling in terms of managing their current operations. And we saw what statement Reliance Jio came out with yesterday. I think they surely don't want any sort of mercy from the government towards these incumbent carriers, and they certainly want to take full advantage of it. I would say this is a slightly sorry state of affairs for the Indian telecom sector and the digitization that we're talking of. Forget rollout of 5G networks in our country, where in the world we have seen 5G network rolled out in many of the countries. I think these companies don't have enough money for proper capex for migrating entirely from 3G to 4G. So that's the problem area. And again, I think what I feel is that the only reason why the government might want to step in is not to bail out these incumbent telecom carriers, but more about saving the banks and again having another spat of corporate slippages. So let's see what happens and how much of a muscle power does the government support. But Idea Vodafone, I think one should totally avoid. I think one should not get carried away with the 3-4 rupees price tag. Unfortunately, there are even talks about Vodafone exiting the market, and they've already written off on their parent level a lot many dollars. So I doubt if they would be at all interested to pump in more after this particular ruling. So I think it's very sorry state of affairs. And again, I think the biggest beneficiary of this would be Reliance Jio being #1 beneficiary, and I would say Bharti Airtel still has the muscle power to kind of face this challenge.
Yeah. It certainly does. The question is whether the value erodes or whether it doesn't. But sane advice from Parthiv, don't get carried away and maybe avoid Vodafone Idea. It's a bit of a falling knife right now as a stock. Let's wait and watch. I would want to talk a bit later on in the show with Parthiv about Info Edge. That stock has hit new highs. And what to do with Avenue Supermarts if you have that stock, simply because of the ginormous valuations that it is trading at. But we'll do that in a bit. First, also time to talk about technicals. Rahul Randeria joins in right now to start off the proceedings on the charts. Rahul, good morning. Thanks for joining in. What's the index strategy for the day? Are you going long or short on the Nifty or the Nifty Bank?
Yeah, good morning, Niraj. If you look at the last couple of days, the Nifty has been rallying slowly and gradually and making a move towards testing the levels of the all-time high near about 12,108, and currently we are just short of making that particular levels to be tested. Today being a monthly expiry, we could see some sort of highly volatile session. Yesterday's trading session, if we see, the daily candle has formed as some sort of a hammer, or what we call as a hanging man with a lower shadow. And yesterday was an open high, which was around 11,884. So definitely we feel that that would be broken out, and again Nifty would test higher levels from the current levels. So any correction on intraday basis, maybe around 11,800 should be used as a buying opportunity with a stop loss of 11,740. On short to medium term, I feel that there was a swing high which was a pain area, 11,981 on the spot level. That could be tested in short to medium term. But specifically for today, I feel that Nifty could test the level of maybe 11,950 or 11,920. This is the area where we feel that today Nifty could test those levels. But overall, it is a buy and dip strategy. One used to have if anybody wants to trade in Nifty.
Okay, so buy on dips, not at the current levels. In light of that strategy, Rahul, what are the stocks? Let's start with two ideas for the morning.
Yeah, I have two positional calls. First is a buy in JSW Steel. After a long consolidation of couple of weeks, stock has given a breakout supported with strong volumes. So one can buy for short to medium term in the range of 234 and on corrections to 229. Upside positional target is 260 with a stop loss of 222. My second buy call would be in Bajaj Auto. The momentum in the stock and the undertone is bullish in this. The charts are going stronger and stronger day by day. So definitely one can accumulate in the range of 3,222 and maybe on corrections to 3,195 with an upside target of 3,357 with a stop loss of 31 or 58. Both the calls are short to medium.
Okay. We'll come back to discussing a few other stocks with you, but onto a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we are looking at Strides Pharma, and this is the long-term charts that are indicating a pattern breakout of all the counter. But before we get ahead, there's an important indicator which too has given a positive signal, which is the MACD indicator, and we'll talk about that first. So the MACD indicator, as we know, is a trend-following momentum indicator and shows you the relationship between the two moving averages of the price. How do you interpret it? Well, whenever the MACD line crosses above the signal line, it indicates a positive crossover. Whenever the MACD line crosses below the signal line, it indicates a negative crossover. Now coming back to the price chart of Strides Pharma, and I'll first talk about the pattern and then the MACD indicator. So as you can see, this is the weekly chart of Strides Pharma, and it has given a breakout from its falling wedge formation. So it has been consistently in a downward movement, testing the resistance around the trend line, but on the weekly time frame, the chart has managed to break above that mark and is sustainably holding above it, with volumes too being fairly supportive. In yesterday's day of trade, we saw again that the counter moved lower on an intraday basis, but managed to close higher and had a strong closing as well. The MACD indicator, that's most important again, because that has given a positive crossover. So the MACD line, which is the one in blue, that has crossed above the signal line to give that positive crossover. The last time it managed to do so, it failed to cross above the trend line mark, and then we saw the correction happen again. But right now it is trading above that mark, so one could look to enter the stock at current price or on dips, but should the view would be negated once it falls below the upper end of the trend line.
How well has this worked in the past, Yash?
So as far as the MACD line is concerned, Devina, the crossover, every time that has happened on the weekly time frame, 3 out of the last 6 times, it has managed to give positive returns with a closing basis returns of anywhere between 7.5%. But do keep in mind there is a stiff resistance around the 55-week exponential moving average, which is placed around the mark of 320. So that could be a target that one could watch out for on the upside, which is higher than 7.5%.
Right. Yash, thanks very much for that. So watch out for Strides Pharma there as our Bloomberg Edge stock pick this morning. Parthiv, I just want to come back to you on a Quest Corp. Did you see the results? I mean, you've seen the EBITDA go up by about 41%, but however, the bottom line didn't reflect much of this. Margins also saw a slight bit of an improvement of about 6.1%.
Certainly, I think the results were very good, and my sense is that I think this is a segment that they are into in terms of facilities management, recruitment, where I think in India there's a huge potential. We have seen many of its peers do extremely well, and again, I think this is a company which had some issues in the past in terms of the stake that was owned by Thomas Cook, and also I think in terms of past couple of quarters, in terms of the performance, the margins were a little tepid, ranging between 5.2 to 5.5%. This particular quarter, at least on the margin front, there is some sort of stability at around 6.1%. And I think this is a company which is governed by very credible management. And certainly, I think over the longer horizon, such themes will do well. No doubt on the valuation front, I think one would say it's looking very pricey. But again, these are the type of businesses where there are much or too many of the peer comparisons, and they do tend to get some sort of scarcity premium in terms of their valuations. But I think give it 3 to 5 years, it's a proxy to India's growth story. And I think this is a niche segment where scale is always very important. There are many smaller players who tend to find it very difficult to compete with likes of Quest Corp and other players. So I think certainly it's a good stock to own at this juncture, according to me, and over the next 3 to 5 years should create substantial value.
Would you buy Quest or would you buy Team Lee's, Parthiv, between the two?
That's a great question, but I think Team Lee's has done phenomenally well. But valuations, I think in terms of the gap that I was seeing, Team Lee's is almost 30 to 40% more premium valuations as compared to Quest Corp. So at current valuation comfort, I think Quest Corp could be a better buy than Team Lee's.
Okay. If you had Avenue Supermarts in your portfolio, Parthiv, would you book profits, part or full?
I think this has been a stock where at 1300, 1500, 1600, all levels when we have discussed, one key concern has always been the valuation. But markets have always defied the gravity, and I think this has continuously gone up. Certainly, this is a company which has plans to raise funds, and the only reason where I see that there could be correction is if the promoter holding were to go down, or I think there is some sort of a QIP. And we've seen it in the past, they had raised funds, and I think what the market is liking is that this is a company which is not going to dilute a lot of its equity because of the rich premium valuations. And I think there is always a demand whenever they come out with any sort of fundraising equity offering, even at levels of 1700, 1800. No doubt, I think the valuations are extremely rich. But my sense is somebody is holding this stock since a lot lower levels. There is no harm booking at least 50% of your profits and maybe switch into another theme, something like, say, a trend. I'm talking about sticking with the retail sector, but I think maybe a trend could be a very good buy at this current juncture, and it could also outperform in the longer horizon. But maybe I think not a bad idea to take at least 50% profits in DMart at current juncture.
One stock that did well yesterday was also Interglobe Aviation. The stock was up about 7.5%. Rahul, from a trading standpoint, Interglobe Aviation.
Yeah, looking at the momentum, I feel that maybe upside could be possible today, because if we compare yesterday, day before yesterday and yesterday's candle, it has shown some sort of morning star pattern. But I don't see a V-shaped recovery. It would be a positional call maybe for next 6 to 8 months that stock has potential to test the levels of 1800. Maybe because of the last 2 days of momentum, this could be extended towards the level of maybe 1550 today. So anybody who wants to take a call for at least for 1 day can buy at current level with a very strict stop loss below 1480 for an upside target of 1550, but that would be only for today. But I feel that stock could go into a consolidation mode. But yes, definitely for long to medium term, I have seen on the charts that in the recent past also the stock has tendency to break significantly and again cover up the grounds in the coming months. So definitely I have a target of 1800 in next 6 to 8 months. But for trading today, one can buy with a stop loss of 1480 for a target of 1550 on the upside.
Are you seeing recovery in RBL Bank also? Is there strength in the charts there?
Yeah, if you look at the momentum, again the stock has seen some sort of arresting of the downward falling trend. There was a tremendous selling pressure a couple of days back, but that seems to be slowing down. On the immediate basis, I feel that stock can test the level of 300, and if it sustains above that, then it has a potential to test the level of 340 maybe in next 3 to 4 months. But definitely for medium term, maybe for a couple of days, it can test the levels of 300, and I would be watching out for the levels 300 to be breached and closed for maybe at least couple of days, and then we might see an extension of the target towards the level of 340.
Okay, about a minute and a half left. Parthiv, a quick thought, non-BPCL, non-Shipping Corporation of India. Is there a PSU name that you like? Alternatively, if not, verdict on the Concor results.
See, firstly, I'll talk on the Concor results. I think I would say this is a company which is currently getting whatever valuations it is purely based on the buzz of privatization or government strategic stake sale. They had guided for a 10 to 12% sort of a volume growth for FY20. What they delivered is like negative 1% volume growth. And this is, I think, I would not blame the company. This is purely a proxy to the current economic scenario. And I think that's going to stay as it is for the second half as well. So purely on a fundamental basis, I think Concor is certainly not a buy at current juncture. Very important to understand and see at what valuations the government would exit the stake. So I think it's a very difficult call to give, especially after the run-up that we've seen in Concor. Now, I think Neeraj, very frankly, talking about the PSUs, I think railway is a particular theme that I feel.
Parthiv, let me come in. I've got your Concor answer. We are just 30 seconds away from pre-open, so let's take that PSU answer post the pre-open session. But Devina, suffice to say, if yesterday's action is anything to go by, there will be interest for sure in PSUs. Whether or not they go up or no is another question.
Yeah, and in fact, in the Nifty 500, the top 10 stocks had a majority of PSU names in terms of gainers. About 15 seconds left to go for market pre-open. The SGX Nifty still holding on to gains. We've got China also moving into the green now, and Hang Seng improving. So now 1.24% from just about 0.9% that we checked on a half an hour ago. For the SGX Nifty at 11,891. Nifty 50 opens up flat to marginally positive. Sensex got a gain of about 0.5%. Interesting to see what happens to individual stocks. And from the index, first up, I want to see what SBI is doing after that big 3% move in yesterday's session. Looks like it's carrying forward those gains. Today's trade up about almost 1%, so 292 on SBI. Remember, you've got targets of 350 plus on SBI from various brokerages, right from Edelweiss to HSBC to UBS. And the commentary is pretty positive. Z is the other one, 242 then, 3% higher for Z. Infosys at 670 moves up. IOC reports numbers today, so ahead of numbers is up about 1%. Then you've got the likes of HDFC, HDFC Bank, both of them up 1%. Reliance Industries at 1490, doing okay for itself. Maruti Suzuki moves up about 0.5% plus. Britannia, Bajaj Auto marginally in the green. Amongst the losers, Tech Mahindra is showing you a 5% cut. Following that, it's HUL, Coal India and Sun Pharma with cuts of about 0.5%. It's more green than red, so the initial, the optical view is positive. 443 stocks still looking to start off in the broader markets in the green, and 149 stocks in the red, but individual stocks.
Yeah, just 2 or 3 names. Quest Corp, if that is reacting at all to its numbers. Container Corporation, the other one, if that is reacting to its numbers. And then, of course, we watch out for a lot of these PSU names. Concord is down 2%. We watch out for the other PSU names, the SCIs, ITIs of the world, and what they are doing in the session today. But let's give these rates a chance to stabilize, and then we'll talk more about them. Just lastly, HDFC Life, after that big move in trade yesterday, let's see if there is more in store in the session today. Might start off well. Let's wait and watch. Valuation's expensive, but time will tell. The currency and the bond yields, we've kind of briefly marked them, but just bring them up. But the currency at about 70.77, so flattish compared to the open in trade yesterday as well. It opened at about 70.81 or thereabouts yesterday. Currently about 70.77. The bond yields too should be flattish. Nothing out there. 6.47. Somit Sarkar Johnson with the top brokerage calls for the day. Somit.
Good morning, Raj. Firstly, it is Gujarat Gas, where Jefferies has upgraded its rating to buy from hold and have hiked the target price to 240 from 170. Now, despite availability of cheap fuel substitutes, the loss on market share is not playing out amidst regulatory support and uncertainty on the long-term prices of these fuels, thereby mitigating the key concern on Gujarat Gas, that is the loss of market share, says the brokerage. Now, Morbi had seen a near-term blip in volumes in August and September month, but after a strong July month, but volumes have again started to recover. The brokerage is expecting the average volumes in the second quarter could still be in the north side of around 5 million metric standard cubic meter per day. Along with this, economies of scale and lower spot LNG prices will also support the margins of the company, says the brokerage. And on the back of all these reasons, the brokerage has upgraded its rating to a buy. Second one is on BHEL, where Nomura has downgraded its rating to a reduce from neutral and has cut the target price to 54 rupees from 56. Now, according to the brokerage, the underlying liabilities like high fixed employee cost, high share of state and private receivables, lack of provisions for substantial employee liabilities and liquidated damages will make a strategic sale tough for the government. Now, the brokerage expects weak thermal ordering until financial year 2022 and see the above mentioned factors will not only be a challenge in the proposed asset sale, but also it will make the turnaround difficult for BHEL. It also says that BHEL is unlikely to be a good strategic fit for any buyer, and the benefit of the land monetization that is expected from BHEL looks exaggerated. Lastly, it has cut its FY20 EPS estimates by 27% for BHEL on a weak near-term outlook.
All right, Somit, thanks very much. So BHEL, quite contrary in terms of the views put out by CLSA yesterday and by Nomura today. CLSA had actually upped its target to about 67 from a sell to a buy for BHEL. Nomura is slightly more negative on the counter, 58 in the stock. Parthiv, let's come down to those PSU names then, and what's your view there?
Sure. So I think we like the theme in the railway sector, and very frankly, we are not big fans of very capex heavy PSUs. We know how the track record of government's capex has been. So in which case, I think a company like RITES really, I think, fits the entire case of investing into. The reason being that this is a company which does not do any sort of capex. I think they are mainly into consultancy in engineering, and I think they are a type of a company which charges a consulting fee for all facets of transport infrastructure and related technologies in terms of concept to commissioning. And I think, see, this company over the last 3 years has delivered a sales growth of almost 23% compounded. They're quoting at ROEs of around 19.30%. ROCs are also at 29%. And again, I think it pays out 38% of its profits as dividend. So the current dividend yield is also at 3.57%. I think there's a long way to go for such companies to deliver a lot of such commissioning projects for a lot of railway related work. And over the next 5 years, we are penciling in sales growth of anywhere between 20 to 22%. And with such dividend payouts, I think, and with the yield going up, I am very confident that this will be a compounder in a portfolio. So I think this is one PSU which we like based on its business model, debt-free status, and again, I think a long way to go in terms of the work that it does.
Well, maybe PSUs do well in the session today. For now, they are not the pre-open session. Let's wait and watch if there is more in store. Ruchit Jain of Angel Broking with us on the charts as well. Ruchit, good having you. Thanks for joining in. Let's start off with the stocks. Ruchit, we'll get to the index in a bit. The stocks that you're recommending in the session today, the two ideas for the morning.
A very good morning, Neeraj. Well, I have two buy recommendations today. First is a buy call in Jindal Steel. Well, the overall metal space in last 1 or 2 weeks have shown some good momentum with rise in volumes. If we look at Jindal Steel, then the recent rounding bottom formation has been seen in the stock. So we believe the stock is headed higher now towards this 200-day moving average. So for just 1 or 2 trading sessions, we advise traders to go along with stock below 111, expecting target around 123. And the PSU banking space, yesterday's trading session witnessed an up move supported by very good volume. So finally, after a good momentum in the bank nifty in last few weeks, now the PSU banking space have started showing some signs of revival. So SBI being a large cap and one of the leader amongst this cap within this space, we believe that this would continue to take the leadership and take this index further higher. So SBI is second buy recommendations. Short-term traders can go along with stock below 279 for near-term target around 309.
Okay, so some ideas from Ruchit Jain on some of these stocks as well. Ruchit, a stock which did very well in the last few days is ICICI Prudential. On the charts, do you see some more upsides?
Yes, if you look at the structure, then the high top, high bottom structure has been continuing since last 3 or 4 months now. And on every declines, the 20 days exponential moving average has acted as a support. Now, since the prices are trading at all-time high, usually reciprocal retracement theory is used to look at the target projections or the resistor or the resistances. And the reciprocal retracement theory is indicating a probable target around 540 to 560 range. So I think this momentum is likely to continue, and we could see levels around above 540 near term.
Okay. JK Tyre is the other one. I think the stock's up almost 14% in pre-open. Reported its numbers. Net profit was up 3.3 times on a falling revenue of about 13.6%. Margins came in much higher at 13.8% versus 10.5%. And the stock's doing exceptionally well right now at pre-open. Rahul, a quick take on JK Tyre if you track it.
Yeah, Devina, on the daily chart, the stock has been making a bottom formation. It is forming an inverse head and shoulder pattern, and currently it is just near its the neckline area. And definitely, if it opens around maybe 14% higher from the current levels, that is its 200-day moving average, which has never been tested in the recent past or in the long term. Since May 2018, it has never tested it 200-day moving average. So definitely, I would be watching out to those levels, and if it opens around say 80 rupees, first thing one should do is just book profit, because last 6 weeks the stock has been consolidating and there has been some sort of accumulation, because the price volume action was flat, volumes were consistent, and oscillators were making positive indications. So definitely at 80 rupees one should try to book profits, and then after that, once if it cools off maybe around 75 to 72, that would be the again right opportunity, because after the inverse head and shoulder breakout, the stocks or price have tendency to again pull back towards the level of the neckline. So that would be the area to re-enter at those levels. But at 80 rupees, one should try to book profits.
Okay.
But fundamentally, I was wondering, Devina, because the results have looked okay and raw material costs have been contained. Parthiv, did you have a chance to look at the fundamental performance, and based on that, what's your call on JK Tyre?
See, very frankly speaking, I think the only saving grace this particular quarter has been the RM cost to the sales. And no doubt, I must give full credit to the management for consolidating the assets of Kesoram Tires pretty well. But I think it's going to be a little tough, Neeraj, for many of these tire makers. And this is where I think the market share of these tire makers in the replacement market is very key. And unfortunately, JK Tires does not have a huge market share in the replacement segment, which is where a company like MRF, which has a huge market share in the replacement tire market, will do well and will sustain decent volumes. It's a tough going. We know that the OEM space is struggling. They're cutting costs, so they're not going to allow these tire manufacturers to earn a very high margin. So I think we would prefer to invest, if at all, in the tire space with a company like MRF vis-a-vis many of its other peers.
All right, nonetheless, on the back of that, Fiat is also doing well. It's up about 2%. I don't know what Apollo Tyres has been doing. That's also up about 1.3%. So most of the tire stocks is fairly active over the last few days. Well, we're just minutes away from market opening, and we tell you all that you need to know to stay ahead and trade today. Container Corporation reported an exceptional loss due to discontinuation of export incentives. The numbers, apart from that, were in line with estimates.
Tata Global Beverages reported strong growth in its Indian tea and instant coffee business. International business, however, remained weak. Amongst other earnings reported after market hours yesterday, Credit Access Grameen, JK Tyres and Quest Corp reported a strong quarter.
SBI and its analysts meet guides for a strong second half, says it is confident of sustaining improvement in core operating performance.
HDFC Life was trading at a record high in Wednesday's session. Data reveals Capital was the buyer of half of the shares on offer in the block deal yesterday.
And amongst key results today, Indian Oil, Manappuram Finance and Spandana Spurti will report their numbers today. Watch it for all of those names. Actually, Parthiv, I want to come to you. The other active stock, and you know, the last few days have been, it's been the center of attention, at least on the mid-cap space. Polycab, would you be a buyer here?
Yes, I think this is a particular theme that we have suggested on your channel even in the past. And Polycab as a stock, purely in terms of its strategy of going more into the consumer segment via its fast-moving electrical goods. And I think see the valuation gap. I think Polycab, when we had discussed this stock originally at levels near around its IPO, post-listing, it has done phenomenally well. And the reason being is the last quarter results. Certainly the first quarter it reported after the IPO was slightly disappointing in terms of the results, but the management had indicated it's more like a one-off in the quarter, and going ahead the results and the performance would improve. They've maintained their market share in the cable and wire segment, and this is a theme which is already growing at around 12 to 13% compounded, and Polycab is taking more market share from the unorganized. They have huge capacities in place, which is going to be a key differentiating factor versus many of its peers. Its distribution is very strong, and they're using this entire distribution for their FMEG business, which currently in terms of the EBIT margins are on the lower side, but that is showing a phenomenal improvement as and when they are showing more economies of scale. And yet, if I were to compare in terms of the valuation gap between likes of Havels or for that matter other peers, I think Polycab is still quoting at a huge discount. So if they show similar performance in the consumer-centric business, which is currently at 30% of its revenue going higher, I think certainly a long way to go for this stock to get further re-rated. We like this story, and despite the run-up, we still believe I think one should hold on to this for the next 3 to 5 years.
Buy it afresh as well?
Neeraj, I think it's always a little difficult to buy it afresh, especially after such a run-up, but any dips of 5 to 10%, if at all it comes, then I think again it will become very interesting.
Okay, we'll watch out for this, but you know, we're very close to market open. Ruchit, just a quick 20-second view first on the Nifty or the Nifty Bank. The Nifty Bank likely to start off 180 points higher, the Nifty 46 points. Would you trade either of the two indices? Very quick 20-second view.
I would like to create fresh long positions on Nifty for a day trading perspective. 11,800 open put option has witnessed good amount of open interest addition yesterday. So one can go long on Nifty if we get around 11,850 during intraday, with stop below 11,780, and expect targets around 11,950 to 12,000.
Okay, top call then for the day, Ruchit?
Jindal Steel, I would stick to that because the stock is opening with a minor gap up, so that would be more positive for the stock. One can go along with stop at opening with stop below 111. First target would be 123, followed by 127.
Rahul, your top call for the day?
Yeah, top call for the day would be Oil India. One can buy at 165 to 164. Positional target would be 185 with a stop loss of 161.
Okay, Rahul, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us your perspectives. Parthiv, Richard, stay on. We'll just take in opening thoughts from you post-market open. But here's how the markets are starting off. Yet another day of gain on offer. The question is, can we close as high as we are opening, about 1/3%. Maybe we can do more as well, by the way. Let's wait and watch. But maybe some profit booking in the second half of trade could not be ruled out. 0.5% up for the Nifty Bank, doing better than the Nifty and the Sensex. The mid cap and the small cap indices should also come up on your screen. So after 0.5% from the large caps, we have nearly 0.5% for the mid cap space, and the small cap index about 1/3%. So that's the nature of the move on open. The market breadth is positive. Let's get the heat map up on the screen. One row of red, so just 8 stocks or 7 stocks in the red, almost everything else in the green. What is doing well? Infosys, after having quite a bit of a performance gap in the last few days since the whistleblower complaint came out, Infosys tries to narrow that, so about 1.5% to 2% up in the green for Infosys. TCS lying very, very flat. State Bank of India, positive commentary in the analyst meet, at 1.5% higher. There is strength in select pharma names, so Dr. Reddy's, Sun Pharma are doing okay for themselves. Watch out for them. ICICI Bank up about 1%, good going there. There is strength in HDFC Bank, about 0.5%, good going there as well. Nestle about 0.5%, Bajaj Finance 0.5%. So the financial heavyweights are doing okay. Keep that at the back of your mind. What is not doing well? Yes Bank down about 1.25%. Tata Motors down about 1%. UPL down about 1%. So those 2 or 3 names. Tata Motors seems to be taking a bit of a breather after the breakneck rally that it had, the rally at the breakneck speed that it had in the last 3 or 4 sessions. This is taking yesterday and today a bit of a breather, I guess. A couple of pockets that I want to highlight. Firstly, a set of companies which are trading near record highs for themselves. So InfoEdge marches on further. Avenue Supermarts closing on the 2,000 mark. Maybe it's already nudged it, I don't know, but 1999 currently. And ICICI Pru at about 512, just lying flat. But Avenue Supermarts, clearly the man of the match right now, 1999, very near, close to 2,000. PSU banking stocks, or PSU names by and large, which have been the flavor. And in today's session as well, United Bank of India up 12%, Central Bank up 1%, Syndicate Bank up 5%. There is no stopping some of these PSU counters, Devina.
Yep, and you got some result reactions as well. For one, JK Tyre is up about 11.5%, doing well for itself. Saw the profits go up about 3.5 times, almost 3.5 times. Credit Access Grameen also on the back of numbers. Pre-open session had shown you a bigger uptick. I think 2% is what it's trading at currently. So that's Credit Access Grameen for you. Godrej Properties, it's now above 1,000 once again, so that's up 1.8%. There's some interest in the likes of Oberoi Realty also, which has moved up in the session. Canfin Homes, PVR, both these names up about 1.5%. The recent listing IRCTC continues to do well. It's above 900 now. So that's up 1.5%. Interglobe Aviation, after the big 7% pop in yesterday's session, carries forward the gains into today's trade, 1% higher. Polycab at 877, also up 1% in trade. Jubilant Foodworks closer to 1% higher in the session, so doing well for itself. DLF also up about 3%. So real estate as a pocket is doing fairly okay. Tire as a space is doing okay. From the others, you've got the likes of LIC Housing Finance along with the Canfin Homes, that's doing fine. Seat is up 1.8%. Apollo Tyres is up 1.7%. So Tire as a pocket, as I said, is doing okay for itself as well. So that's what you've got in terms of some gainers. RBL Bank gives up a bit in today's trade. That's down in the session. You've got KPID Tech, which is down. Muthoot is down about closer to marginally, not too much in terms of losses, but that's what you've got. But still, the breadth of the market is extremely positive. 835 stocks are advanced, just about 265 stocks which are trading in the red.
Okay, quick opening thoughts. Ruchit, 296 for State Bank of India, would you trade it?
Yes, I would recommend creating fresh longs even at current levels because, as I said earlier, the PSU banking index seemed to be showing some good amount of pullback move, and the SBI being one of the heavyweight within this index, I think this would take the leadership. And in near term, the stock would first approach its 200-day moving average, which is around 305 to 310 range, and once that is surpassed, we could even see 315, which is the swing high that was seen in the month of September. So at current levels, also one can look to create long positions in State Bank of India with stop loss placed below 279.
Okay, Ruchit, leave it at that. Thanks much for taking the time out. Parthiv, one very quick thought. You voiced your opinion on telcos. I want to ask you about a falling knife. Bharti Infratel, 6th day on a trot now in the red. Has it gotten beaten down too much, or would you believe that this is par for the course?
See, Neeraj, very frankly speaking, I do believe that it has been beaten down way too much and the valuations have become very, very attractive. But again, I think this is a sector where we are seeing a lot of credible names and maybe some of the FIIs and DIs probably taking an exit route because of a lot of policy uncertainty. No doubt, I think this is a totally differentiated business model. I think such assets can't easily be created. And we've seen in the past, like companies like American Tower Corporation have invested and poured in a huge FDI in many of the Indian tower space. So I think I'm not saying that it could be a great buy and there couldn't be more downside, but current valuations and looking at the past track record of how well this company has managed the business, I think certainly the valuations are very, very attractive. But as this entire space I talked about, I think it's little precarious right now, and better to wait out to see what policy action the government takes, any sort of bailout or any sort of relief measures that the government wishes to take, in which case again we can revisit and decide whether to park in money in Infratel or not.
Okay. We'll leave it at that, Parthiv. Thanks very much for joining us this morning. Really appreciate you taking out the time. All right, and it's time now to bring in yet another guest, an important one. Mr. U R Bhat, Managing Director at Dalton Capital Advisors, joining us on the show. Mr. Bhat, we missed you on Diwali, so I wish you a very happy New Year.
Thank you. Thank you.
Let's start off first with, obviously, we're in the midst of the earnings season. More positives than negatives?
As of now, I think it is on that side, but quite a lot of the results are yet to come, especially the public sector banks. The big ones are, except the biggest one, others are not come. So I think that's a very important sort of turnaround story, if at all it happens. So therefore, I think we have to wait, because typically the worst results come last. So therefore, we can't really be celebrating too early.
But is the mindset changing a bit, do you feel? Is it a more risk-on sort of a trade now?
Well, I think the sentiment has changed a bit, especially with this talk about personal taxation, some flip there, even though I think there is some denial also there. So therefore, that is one that is keeping the market sentiments high. Plus, of course, you have seen even the festival sales have been reasonably much better than what was initially expected. So probably there are some green shoots somewhere. But I think after all that, we have to see that we are inches away from the historic highs. So we already factored most of these in already.
Actually, that was going to be my question. Do you reckon at these levels, with the earnings that we have, the markets are baking in the positives from the divestment phenomenon, which is the government speaking about, as well as potential personal tax cuts? Are we baking that in already?
I think so, because we are very nearly at historic highs. So therefore, I think most of it is baked in, because the results don't seem to suggest that there's a big turnaround and there's going to be a big improvement in earnings.
But potential earnings recovery, again, I take on board the point, but one, that the delivery of the 25-hour Nifty companies and some broader market companies have been good. And SBI's commentary that Devina was referring to the other day, Rajneesh Kumar spoke about recoveries coming in, the analyst meet speaking about the second half being much better. And if SBI is saying that, maybe the same might hold true for ICICI, Axis and some of the other large corporate facing banks too. Are we staring at, therefore, maybe potentially slightly better earnings performance than what the market would have believed before SBI commentary?
Yeah, I think so. On the margin, I think that's a very important positive for the market, and that's why the market has been going one way for the last several days now. In addition, you had at least the FIs top selling and some incremental buying of course, except yesterday was a big one. But otherwise, I think they have been marginal buyers for the last 4-5 days. But I think these are the things that are keeping the market up. But I think given the fact that we're very nearly at historic highs, there might be some resistance at these levels.
October is still going to be a net negative number in terms of the FII flows. And it's been some time now since the interest has really kept the stock markets afloat, but we're still doing okay for ourselves, 11,900 now on the index. Do you feel that you're setting yourself up for a slightly larger move in the near term? Disruptions will come about, but with the kind of government policies and the initiatives the government is taking, but that's going to become a strong foundation on which growth will take place going forward. And that's the time that, if the FI interest comes in a big way, who's to say where the index can go?
Absolutely. I think we're certainly in a much better place than what we were about a month or two ago.
Then this is still a right time to invest.
Well, I think the international events are very important because the big delta will be from FIIs. So the FIIs have not been great supporters of the Indian market for quite some time now. And if you really see even the big thing, that is the US-China trade war, there seems to be newer hiccups coming up there. So unless that sort of at least phase one is settled, I don't see FIIs coming in big numbers, and the risk on internationally at least taking shape in a very big way.
Yeah, yesterday's number 2 propped up in part by the HDFC Life deal. Otherwise, it may not have been as great. Now, Mr. Bhat, a few 2 or 3 months ago, fundamentals may not have been in place for the autos, but the prices were. Now, the prices have also inched up. Maruti's admittedly up, 30-35% from those 5,500 levels. Everything else has moved up too. Are the autos already pricing in the revival in sales that we might see in October, and if November continues, then that? Or do you believe that if those data points come positive, then you might see a further uptick here in these prices of some of these larger names?
Well, I think most of the auto names are really factoring in potential turnaround post-April 2020.
Oh, really? That far out?
I think so. That far out, because because of this BS6 and issues like that, I mean, there might be some pickup suddenly, because I think there's a lot of inventory emptying that is going to happen now, because people, all these manufacturers cannot manufacture even one car or one vehicle after March 31st, and so therefore they are going to wean away in inventory. So there might be some incentives to sell the BS4 compliant vehicles. So I think this is not exactly a sort of a trend that is going to really determine the future of these stocks. So I think April 20 onwards, probably not even the first quarter of 2021, but the second quarter of 2021 is when I think markets will start to stabilize for the auto stocks, and I think that is what is factored in this run-up that you're seeing.
Yeah, who would have thought, right? I mean, look at those 3-month charts. Who would have thought that amongst the best performing sectors in the last 3 months would be the auto pack? TVS Motors 41%, Maruti 37%. These are some stunning gains by some of these auto names in the last 3 months. The other pack, and I don't want you to comment on specific stocks, Mr. Bhat, but since the Infosys whistleblower complaint came out, there has been a stark underperformance of Infosys vis-a-vis TCS. Now, at some point of time, do you see there being course correction? I don't want you to give me a stock view, but how serious do you believe this allegation around Infosys are, or are they overdone from a fundamental understanding perspective?
Well, no one knows the facts there. At least the market doesn't know the facts. So therefore, I think market just reacted to whatever got published in the media. But I think that said, most of the IT stocks really have pared down growth numbers quite dramatically over the last, say, about a couple of years, and the valuations have to catch up with these lower numbers. And that has not happened. So I think there could be some sort of a time correction in these, because these are market favorites. They're a very important part of the indices, so therefore they may not correct dramatically. But I think a time correction is probably warranted in quite a lot of these IT stocks, because there's a huge mismatch between growth numbers, earnings growth numbers, and valuations.
Few themes, Mr. Bhat, diagnostics, then insurance. These are areas where the interest has been brewing and pretty active in terms of stock price. Paints, obviously, and not just Asian Paints. You've seen Berger, the valuations are steeper than Asian Paints now. These pockets continue to drive? according to you?
Well, I think these are sort of...
or they're just seasonal flavors that come about?
Yeah, they are rush to safety sort of, because I don't think there can be a valuation argument in quite a few of these things. But it is just rush to safety, sector rotation, because people are tired of doing the same things all over again. So I think these are all sort of seasonal favorites. I don't think at these valuations there can be a huge upside to these stocks.
Why would you say rush to safety? I mean, the industry is growing.
Yeah.
If diagnostic space, a very under-penetrated market. Paints, in the next 3 to 4 years, 50,000 crore. This is what Abhijit Roy said. It's going to become a 50,000 crore industry. The growth potential is significant. Insurance, which Indian doesn't take insurance? So why would you say it's just a rush to safety sort of?
Insurance is a new sector, so therefore it is a sort of process of discovery of these stocks, and I know these stocks, quite a few of these stocks will get into larger indices, and so therefore there will be a lot more institutional following. So that is a discovery story, and the same with the sort of diagnostics. Maybe there's under penetration. But I mean, I was talking more about paints, because at these valuations, I don't know how you can. I mean, the sort of assumption there is that they will grow forever at these numbers, and even the P's will remain at these levels. So, which is very difficult for us to sort of say that these will quote at whatever 70, 80, 90 P's, and they are growing at just marginally double-digit numbers, if at all. So therefore, there is a huge disconnect there. Sometimes this will get corrected. It may not be day after tomorrow, but sometimes these things have to get corrected.
Yeah, they certainly have to. Mr. Bhatt, then my final question really is on a beaten down pocket that is just showing some signs of green shoots. You referred to the trade tensions easing.
Yeah.
Metals have started probably seeing the first signs of that optimism.
Yeah.
Valuations are in favor. Do you think it's a pocket that one can bet on?
Possible, but I mean, these are all trading buys.
You're not thinking of
not really. I think you have to really keep track of what is happening internationally and take these bites. But say, for example, if yesterday's growth numbers in the US are something to go by, there might be some, there might be some story there. But that said, Chinese growth numbers are not exactly looking very great. So because China is the biggest buyer of most of these commodities, so therefore one has to sort of balance these out and see how the futures are sort of quoting, and then take a bet on these.
Okay, we'll leave it at that.
Thank you,
Mr. Bhatt. Thank you so much for taking the time out.
My pleasure.
And Happy New Year.
Thank you very much. Same to you.
All right, we need to slip into a break on the note that the Bank Nifty is trading at the highest point of the day, 216 points higher, 30,200. The going is strong. We take a break. Up next, we discuss the September quarter earnings with Credit Access Grameen and Cummins India. Rajiv Batra will be joining us in moments from now.